The upstream MLPs, very clearly, they're dependent and are sensitive to commodity prices. So it's understandable why their share unit prices are down so much. And it's largely a question about the sustainability of their future distributions. Many of them have had to cut their distributions, so that is going to impact their unit price. Others, they have hedge positions in place, but once those legacy hedge positions roll off, then they're at lower commodity prices for their cash flows, and so that will impact their distributions. So their prices are down because the question is whether they can sustain or even resume distributions, and at what level going forward. So it's very clear why the upstreams are down so much. I think some of the upstream MLPs are quite challenged. They've got a lot of leverage in their balance sheet, and not a lot of liquidity. So they may be some distressed asset sellers going forward. They may have to do some debt exchanges to reduce debt in their balance sheets. So question of survivability is maybe much greater on the upstream side of the MLPs. Midstreams, we're having to build out infrastructure in a lot of places because we've discovered oil and gas reserves in places that we didn't have it before, or in much greater quantities than we had before. So that's leading to significant capital spending by the midstream. So their viability is much less in question. But the question is, can they continue to grow at the rate they were growing? And I think that's what's causing some of their prices to be weak.